Oswald and Esmeralda are currently in the process of making one of the biggest decisions of any modern day adult's life, taking out a home loan. The following presentation will outline Oswald and Esmeralda's current financial position by analysing their budget, followed by an investigation of how much money they are able to borrow and an in-depth analysis into the first year's interest, repayments and budget. A hypothetical situation will be considered, which will be followed by a review of the couple's position. Oswald and Esmeralda are both in their 20s and currently live with their parents and are wanting to own a home of their own. Oswald earns $1,600 gross per week and Esmeralda earns $1,400 per week. Together they earn $3,000 gross. Aside from this, they have a deposit of $50,000 for the home loan. Their total weekly income after tax drops from $3,000 gross to $2,289 net. Currently, as they live at home, their total expenses are not high. This means that they are able to save ample amounts of money. Oswald and Esmeralda each pay their parents $100 per week as boarding. They each have car loans balancing at $180 and $140 respectively. These cars also require $100 fuel each. Altogether, Oswald and Esmeralda currently are spending $700 between them of their $2,289 income. This personal budget shows that only 31% of Oswald and Esmeralda's income is being spent weekly, allowing for a $1,589 saving each week if no other money is spent. These expenses, though, would change dramatically when moving out. Oswald and Esmeralda can allow for $840 towards the home loan to ensure they still have spending money left over. The couple will need to pay for essentials such as food, insurance, telephone, electricity, water and internet usage. Each of these additional expenses add up to $2,010. This is $1,310 more than if the couple were living at home. Based on this information, the Commonwealth Bank Home Loan Calculator is able to calculate the amount of money that Oswald and Esmeralda can borrow from the bank. It was discovered that they can borrow up to $610,000 over the 30-year term. The amount given is based on a variable interest rate of 5.22%. Though, being a variable rate and not fixed, it means that the interest rate can rise at any time. While variable home loans rates are lower than fixed, it can catch many people off guard who aren't in the financial position to keep paying off their home loan. Fixed rates are more secure, but have a higher rate, resulting in more interest being paid over the 30-year term. Oswald and Esmeralda are estimated to pay the home loan monthly, with the repayments being interest and principal of $3,358. Interest and principal means that both the monthly interest and some of the home loan sum are being paid off. There is another repayment option, which is interest only, although this alternative only allows the payee to pay off the interest amounts and no amount of the home loan itself. This table demonstrates the breakdown of repayments for the first year. The left column represents the beginning monthly balance. The middle column signifies the amount of interest paid. In this case, it's 5.22% each month. The final column shows the amount of interest plus the principal, subtracted by the monthly repayments. For example, in January, the full amount of the home loan was owed. The interest amount was $2,563.50. This total came to $612,563.50. When subtracted with the monthly repayment, the new balance of the home loan is $609,296. It can be seen that after one full year, only $7,920 has been paid off the actual home loan itself, while $31,636.78 was paid to Commonwealth Bank in total. Using this method, it can be discovered that over the 30-year term of the loan, $955,260 in interest will be paid, making a total of principal plus interest to be $1,565,260. Oswald and Esmeralda's income will stay the same, with a total net pay of $2,289. This updated budget accounts for the cost of living in a house independently. It can be seen that the couple is financially ready to take out a home loan. While 88% of their budget is being spent, they will still have $279 to save. None of this money will need to be spent weekly, as spending money is already accounted for in the budget. This money can be used for emergencies, such as a car breakdown, or could even be used to save for a holiday or new car. As the rate of home loans are constantly changing from bank to bank, it is possible that the stock market rises the interest rates. The following table is identical to the previous, though this table demonstrates the hypothetical situation of a rise from 5.22% to 8.22%. It can be seen that if Oswald and Esmeralda continue to pay only $3,358 per month, the cost of their home loan will not decrease and it will rise rapidly. Their repayment amount will not even cover the cost of interest. Over the time frame of a year, the home loan amount will rise $9,341, meaning that no amount of the home loan will be paid off. As Oswald and Esmeralda cannot afford to put any more money towards their loan, they will need to reconsider whether it is intelligent to take out a home loan, though there are some ways in which the couple can prepare for the unexpected rise in rates. If the weekly home loan amount is increased to $1,300, there are possible ways in which the couple can decrease their other expenses. Oswald and Esmeralda have 2 cars between them, creating a higher loan repayment amount and a higher fuel amount. By selling Oswald's car, the couple will be able to save $280 per week, based on the loan and fuel amounts. Their food expenses can also be reduced to $150, as it is proven that Australian couples only spend, on average, $140 per week. There are no other ways in which the budget can be reduced. These other additional expenses are imperative to surviving in a house together. Oswald and Esmeralda need to focus on saving money, as they are still young and may be thinking about soon expanding their family or getting married. This amended budget demonstrates the amount of saving if the couple decides to cut out the recommended expenses and increase the repayment amount to $1,300 per week. Oswald and Esmeralda will still have $149 to save each week. They will not need to touch this money, as $200 spending money is already allocated. Hypothetically, if they do not spend any of the allocated money, they can potentially save $349 each week. The following repayment table shows the monthly repayments if the rate rose to 8.22%. It can be seen that the monthly interest amount has risen by approximately $2,000 each month. Although, with a monthly repayment amount of $5,200, the overall cost of the loan will be reduced by $11,629 by the end of the year. A significantly higher amount of interest will have been paid, with a total of $49,669.47 in 1 year. It is advised that Oswald and Esmeralda invest in a home loan. While it will have a large impact on their current budget, it will also have a large positive effect for the future. Currently, as the interest rate at Commonwealth Bank stands at 5.22%, Oswald and Esmeralda will be financially secure enough to be able to afford a $610,000 loan. This will be paid off in monthly installments of $3,358, or $840 per week, reducing the home loan by an average of $2,500 each month. If the interest rate rises by a mere 3%, it would cause colossal problems to Oswald and Esmeralda's home loan. If they continue paying $3,358 as their monthly repayments, they will not be able to pay off their loan, or even their interest for that month. Major amendments to their budget will need to occur. When this happens and the repayment amount can be increased, the loan can continue to be paid off as usual.